Hey, this is Mike, and today I want to do a video on how to handle market meltdowns. Yesterday we had a really rough day in the market. The market just kept going down lower and lower, pretty much finished at the lows of the day, and then continued plummeting after hours. Everything sold off: stocks, gold, silver, Bitcoin. Really, unless you were in GameStop, no one was safe. So, what I wanted to do was talk about how to handle market meltdowns, because if you are in the market, you're going to have the market have days where it just goes down and down and down, and you want to make sure that you don't make the wrong decisions here, that you're able to get through the market meltdown while protecting your portfolio. So let's go ahead and get started. So market meltdowns are scary. You can see your portfolio go down fast. Market meltdowns usually follow big run-ups in the market. This is why you don't want to panic sell, is because on days where the market moves down, let's say 3 or 4% in the market, usually the next day or the day after, the market will move right back up 3, 4, 5%. And if you do panic sell at the bottom, you're going to get very upset when you see the market run up 3 or 4%, and then you have to essentially pay more money to get back into the market. If you keep doing that, if you keep selling at the bottom and buying at the top, you will eventually run out of money and your portfolio will blow up. Remember that big up days follow big down days. This happens all the time. In fact, if you were to look at a chart on Wikipedia of the largest down days in the market and the largest up days, they're usually within about 10 trading days of each other. And that's also the case for when the market moves down, let's say 3% in one day. You'll see 3% up days follow a couple of days later. Also consider that your portfolio should be meeting long-term goals. Therefore, you should not be affected by short-term swings in the market. Now, some people are affected by short-term swings in the market if they're investing money that they may have an immediate need for. So you just have to make sure that you do not have an immediate need for any money that you put into the stock market. This should be money that you want to put to work, so 10 or 20 years from now, that money will work for you. It will essentially be able to fund your lifestyle. Now, I just want to show you an example that the more volatile of a stock that you own, the more drawdowns you have to deal with. So, for example, a stock, a conservative company like Coca-Cola, may have a swing 10% up or down in 12 months. But if you own, let's say, a sub $5 pharma stock, that stock can double or it could go down 80% in 12 months. That's just a normal behavior of a speculative stock. So if you own speculative stocks, you have to accept the fact that these stocks can move up or down really violently in 12 months, and you just have to be able to stick it out. Also, finally, have a healthy plan in place for buying and selling stocks. Now, when I started out as a newbie trader, I made the mistake that a lot of new traders make. And what you do is, as a new trader, you buy when the stocks run up and then you sell when the stocks go down. It's funny, I see people message me when the stock market was doing really well and everything was running up. Traders were messaging me being very upset that their favorite stock that they wanted to buy has run up 20 or 30%, and they don't know what to do. They want to buy it, but they hate that the stock has run up. But I also think these are the same people who will message me when the stocks go down and they go, now all these stocks go down and now I have to sell them. So you just have to change your perception of the markets. Is that when stocks run up, you have to see an opportunity to sell stocks that have become too big a part of your portfolio. And when the stock market moves down, you have to see it as an opportunity to buy stocks that you want to buy. So what experienced traders do is they buy when stocks go down. They have a list of their stocks that they want to own, and they wait for the stocks to pull back, and then they buy those stocks. And then they sell when stocks go up, and usually they sell when one particular stock just becomes too big a part of their portfolio, and they sell some of that stock, and then they can find new opportunities. So the approach that I use is I I buy my favorite stocks when they pull back 5% or more in less than 10 trading days. So for instance, in the pullback, I bought a lot of Bitcoin miners, Riot, Marathon, bought a little bit of Canaan Creative. And what I do is when stocks become too big a part of my portfolio, I wait when the stock runs up more than 5% or less than 10 trading days. So if you've been following my channel, you know I was buying GameStop when it was under $10 a share. And when we had the big run up in GameStop, I started selling shares because it just became too big a part of my portfolio. So what you just have to do is see an opportunity no matter what the stock market is doing. When the stock market runs up, see an opportunity to sell some stocks that become too big a part of your portfolio. When the stock market moves down, see as an opportunity to buy stocks that you really like for the long term. And when you do all of that, when you have a new sort of perception around the stock market, you see an opportunity no matter what happens. When the market moves up, you see an opportunity. When the market moves down, you see an opportunity. So when that happens, then market meltdowns do not affect you in a huge way psychologically. Now, I do know when you own any portfolio, when you have market meltdowns, you're going to see huge drawdowns. And you just have to be able to say, look, this is temporary. The market's going to turn around. It usually does. So those are my thoughts on how to handle meltdowns. I hope it was helpful for you. If it was, please leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, options, and stock trading strategies. Thanks a lot.